Hi all, welcome to Diversified Finance. My name is Lakal. Just a quick video regards to Bitcoin, gold, silver, gold stocks, and the property market. So as we know, Bitcoin used to be around $3,000 mark in November last year, and since then we've seen a massive bull market towards 14,000 mark USD, and since then it has been consolidating around 9 to 11,000 in that range. So yeah, we do see Bitcoin price to go up in value in the future. The trend has kind of changed, the attitude towards Bitcoin has changed actually. So back in the day, Bitcoin people wanted to use Bitcoin as a means of exchange. So they want to go to a shopping center, say for example Coles or Woolworths, and use Bitcoin to pay for your groceries. Now the attitude towards Bitcoin has changed a bit. It's kind of like people kind of tend to consider it as a store of value, so similar to gold. So because of this, we've seen a lot of interest from China and from other countries, and especially when we see the central banks are cutting interest rate like crazy. They look for safe haven. So Bitcoin has become like an option for people to store their value. And gold stocks, same story. Like given that the economy is looking bad at the moment, we have trade wars in between US and China, and then we have seen problems in Hong Kong. We've seen problems in between Pakistan and India over Kashmir. So when we see a lot of economic issues like political issues, likewise. People tend to look for a safe haven. So they're worried about the share market. They're worried about keeping their money in the bank. So they look for safe haven. So gold has been like a really good asset so far, and it's performing really well. It has broken its resistance that it held for the last 6 years or so. So it kind of in Australian dollar terms, it's kind of at an all-time highs, and not so much compared to US dollars. The maximum, the peak we've seen during the last recession used to be around 1900 mark or so. Now we are at 1500, so another 400 US dollars to go up. When it reached that value, we probably be at all-time highs according to US dollars. But looking at other currencies, against most of the currencies, gold is performing really well. So if you've been buying gold, like a physical gold, you've probably seen 20 to 25% gains for the past month or so. Same with silver. So when gold goes up in values, silver tends to follow. Silver, they consider silver as the cheapest asset in the world, like most undervalued asset at the moment. So there's a lot of opportunity if someone wants to buy physical silver and hold it for locker or something for some time. You'll definitely guaranteed to make a lot of money. And then people are talking about some crazy prices. The 1 ounce of silver is around $16-17 right now. But people are predicting it might go to even 100 200 per ounce. That's like crazy gains, if you can hold it in locker for a long time. And the next thing is gold stock. So whenever we see precious metals going up in value, we'll see a magnified gains for gold stocks. So there are some gold stocks for the past couple of years has gone up 2 to 3 times. So whenever we see a small increase in gold price, we tend to see maybe 10, 20, 30, 40% gains for gold stocks, because that's how it has been, because you have to pay 1,500 to buy 1 ounce, but you can own a gold stock for a couple of dollars. So there are some gold stocks you can buy $100 or so. And then the property market, we might we were expecting I think in month of July, we've seen a little bump, a dead cat bounce or something. But unfortunately, the oversupply is massive. The rental market, it's not looking good. We're not seeing any wages growth at the moment. So unfortunately, we're not seeing a housing market going to recover, bounce back, and going to go back up to $1 million mark that we've seen back in the day in 2016-17. But right now it's not about like making a profit. Like a lot of people in severe mortgage stress, and there's a lot of people in negative equity at the moment. So it's not about making money at the moment. It's all about cutting your losses. So people got many investment properties. Maybe it's time for them to sit down and think and say, okay, housing market might not recover, so I'm not going to gain much out of that, but maybe it's time for me to cut my losses. So you need to decide whether am I going to lose 50,000 on my investment property, or am I going to lose 200,000 on my investment property. So if you think you can sell your property at a $50,000 loss, we better take it, right? So if you wait for the market to recover, it might take a long time, because housing market is $1 trillion market. When it has gone up so much in value, like and it goes down, like when the trend has turned, it'll take long time to recover and go back up to the similar prices we've seen during the peak. So we expect housing market to go down, like maybe 5 to 10% for the coming 3 to 5 years, like 10% each year. So we are still predicting 40 to 50% correction in the housing market, because it is so much overvalued. And then we at the same time, we are not seeing any Chinese buyers at the moment, and we have issues with the apartments, like there are cracks appearing here and there. So off the plan market, they absolutely killed off the plan market, and people are scared to get in. So I mean, we can give like 10 reasons, like not to get into the housing market, when there's like only a couple of reasons, like why we see the housing market will go up. So there are more reasons that housing market will go down in the future. So unfortunately, yeah, so the next thing is like if you're owner occupier, the best thing is to reduce your debt. So we can have a budget, and then make sure it's time to cut down, like on unnecessary expenses, right? It's really you need to really sit down and work out how much you get paid, like what's your income, what's your expenses, and make sure that you save more money, like compared to before, and reduce your debt. That's the only way out. Like it's kind of hard, like I do understand it's hard to save when you have a $600,000-700,000 mortgage, but try your best to like reduce your debt, like if you can save as much as you can. So reduce your debt. That's the only way out. Yeah, that's it for today. So thanks for your time. I'll talk to you in the next video. See ya.